Hello, retail traders. I'm Washboard Jim with the Sneaky Snake trading strategy, a strategy that I developed a couple years ago. I've always been a good knife catcher, but I really put it to a fine-tooth comb, and where I talk about chart patterns, moving averages, and being in the now. And right now I'm going to talk about a chart pattern that got me into the SPX Friday, and I was asked a question in the room, Jim, how did you get into that trade? How did you spot that bottom? And I'm going to show you exactly, and it could help some other people out here in the trading world. Retail traders, here we go. SPX. The SPX, real nice little bottom call right here off the 63. We went ahead and respected the 63 all the way up to the top and still respected it to the day we closed with an inverse head and shoulders to boot. But this is how I called the trade out. First, we were like pulling back. This is a 1 minute time frame. And we had a nice little breakout. And we pulled back and we failed support. Support was that daily open right on the body of that candle. We went ahead and failed it and bounced off the 63. So I spotted that and I told the room, let's keep an eye on the SPX and see if we can break a resistance. And the resistance to break was right here. If you just, oh shit. Make sure I got the right. There's support, and we had to break this resistance right here. So we came up and we pulled back again. So we created a new support, a new resistance level right there. And she pulled back again. So by this time I was telling the room to watch it real close, that we had started to form a falling wedge. And when you form a falling wedge, you want to count to 3. So this is the trick that I've told the room when you want to catch a pattern at its prime, just like when you're playing baseball and you got the bat. There's a certain part of that bat that will connect to the ball and will give a better distance to hit the ball. Well, that's the same way with this bat right here. The third time we come up here and we hit the top on that bat, would be a triple top on that trend. That's when you want it to break. If it doesn't, it has to pull back the third time and then bounce off the bottom for the third time and run on up. But in this case, we went ahead and we hit that second one and we didn't touch that third bottom, and she bounced with a higher low, which I call a higher low, which really wasn't a higher low, but it is if you were talking about the trend where it was supposed to bounce off of. So we bounced off the 1, 2, 3. Just like that. 1, 2, 3. She went ahead and broke on out. Jim, she broke out. I said, "That's all right. Let it pull back," and they always pull back. Everything always retrace. So don't ever get into a hurry into a trade. Let it pull back first. So she pulled back and created what we call in the room an inverse head and shoulders. This is when I told the room, I said, I'm going in this trade. I'm buying 10 contracts. Whoops, I don't want that one. They're at a $1.80. So here's your left shoulder, your head with a hammer. She broke out with that hammer. And then that right shoulder. So when it broke out, it came back and hit that right shoulder. So you have a falling wedge and inverse head and shoulders. Well, how did you know it was going to bounce at that certain spot? This is where you get your confirmation. Okay, we had 2 confirmations here. We had a falling wedge, and we have an inverse head and shoulders. But man, it would be nice to have one more confirmation. So we widen up the map. We widen up a little bit. And we'll realize when we pulled back to that opening high. And that was your support level. So I told the room, that's what I said. When I was asked that question, I said, well, we pulled back to a very important support level right here, which was an old resistance. And when we pulled back to it again and found support off that old resistance, so look how close we are to that. I mean, we're right to the penny. Right to the penny. Pull it up one more time. Let's take another good look at that. See this candle right here, this body? That's where we pulled back to in the morning and found support. So that previous high became support. Same thing happened right down here. Could have been asked the same question Thursday. How'd you call that bottom, Jim? Well, it was support on the previous 2 days. It held support down there for the previous 2 days. We had a nice little breakout at open. I was not too bullish at all that day. I waited patiently, and then when I spotted that 3-day low, I said, this is it. 1, 2, 3, man, let's do it. She ran all the way up to the top. So remember keep an eye when you're looking for support at open. Bring up that previous day. Look at the previous lows and the previous highs and the open. And the opening and closing price of each day. That's real good advice when you want to try to get into a trade on a pullback and have such a beautiful call that we made here. I got out. I was up $1,000. I got out and then got back in it a little ways up. I said, this thing ain't stopping. It's not stopping. So falling wedge with an inverse head and shoulders, pulling back to the previous day's high at open. Beautiful setup. Remember them chart patterns at open. Chart patterns, moving averages, the 63, and being in the now. This is a sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now.